Hi, I'm Fabiana from All Finance Matters, and we are here today with Ricardo Chaves, our tax advisor and main certified accountant, to talk a little bit about this new tax incentive, the EFC.
Hi. It's funny that you call it EFC, that's the Portuguese name. A lot of people talk about the TSRI, which is because EFC stands for Tax Incentive for Scientific Research and Innovation. Some other people call it the new NHR. This tax incentive is a bit different from the previous non-habitual residency because it's designed to attract people to work from Portugal and not so much people to retire in Portugal. This means that to qualify, first of all, you need to work for a Portuguese entity, either a startup or create your own company or work for a Portuguese university, for instance, and not to come here and retire. So the main criteria for eligibility is that you need to come and work from Portugal. And obviously the main advantage of this new tax incentive compared with the NHR is that there's a full exclusion of tax on your foreign source income, with exception of income that comes from blacklisted jurisdictions or pension income. Hence, the main difference with the NHR. And when I say that it's designed to attract people, high-skilled individuals to work from Portugal and not people to retire in Portugal.
Okay. Does everyone can apply to the EFC, or there's a minimum level of degree you must have?
First of all, you need to apply on the year that you become a tax resident of Portugal. So if you are planning to move to Portugal, obviously, first you need to look at your visa requirements. If you are a non-EU citizen, you need to apply either via the D7 or the D8, which is the digital nomad visa. And after you become a Portuguese tax resident, you need to apply for this tax incentive before the 15th of January of the year following your move. So if you move to Portugal in 2026 and become tax resident during 2026, you have until the 15th of January 2027 to apply. You can only apply if you have a minimum of a bachelor degree. And that's part of the process for us to certify that you have that qualification, because that's one of the requirements. The second requirement,
It can be any degree, right?
any degree. You could have a master's degree, a bachelor degree. It could be an engineer, an IT person. That doesn't matter. What it matters, obviously, is that the role that you will have on that entity, it's one of the roles that it's eligible under the new tax incentive. It's also important that the service that that entity is going to provide, it's within the list of the TSRI eligible occupations.
Okay, but regarding the tax residency, if is someone already is in Portugal since 2020, he cannot apply for this new tax incentive?
No, it's only available for new residents, and in 2020 we still had the NHR, so
Okay.
it needs
But
to be for.
If that person didn't have the NHR ever,
Yes, it's not available because if you moved into Portugal in 2020, at that time the EFC was not yet created. But it's possible that if in the future you miss the opportunity to apply, we expect that it will happen the same criteria that currently exists with the NHR, which is if you miss the deadline, you'll be able to apply later and you lose the year that you didn't apply. So for instance, if you were supposed to apply in 2027 and you miss that deadline, instead of having the 10-year benefit, you will have 9 years. Because don't forget that this tax incentive, like the previous NHR, will last for 10 years. So you will have these tax benefits only for 10 years. It's not renewable, and it cannot be applicable to anyone that was a previous resident or that benefited from the old NHR rules, or from the young personal income tax rules.
okay. And besides the 10 years, what other advantages we have with EFC?
The advantages are quite wide, because it means that if you come to work in Portugal, and I'll give you a couple of examples. Let's imagine a client that is selling a company in France. And there is a huge capital gains on that sale because the company is now worth a lot more money, so he's planning to sell and come to Portugal. Is the capital gain tax is due in the country where you live. So the double tax agreement between Portugal and France, for instance, and the same with the Portugal and the UK and most of the other European countries, it states that you pay the capital gain tax in the country where you live. Please remember that we are not talking about property, we are talking about the shares in a business. And what happens is that if this person comes here, he sets up his own entity, or he uses an entity that is already fully compliant to the EFC, like our employer of records, he has a tax incentive and he will sell the business after being on that tax incentive. And that means that he will not pay the capital gain tax in France, and it will not
Neither
pay
here.
here because here he has the benefit. So there are different ways. I mean, we have clients that have dividends, that most of their income comes from dividends, and they will not pay the dividend tax in the UK, neither in Portugal. Obviously, if you have an entity in the UK, you will still pay the corporation tax there, if there is any profit. But the dividend tax, it will not be taxed in the UK because you will have the no tax code because you're not resident. And here you will report it, but it won't be taxed. So there are different opportunities arising from this new tax incentive for people that want to come here and work. So people that want to come here and retire, the pension income is not included on these tax exemptions. There are other ways of mitigating the tax in case you made contributions to your pension, because in that case, under certain circumstances, 85% of the income coming from this pension is excluded from tax in Portugal, which means that the taxation is very low and possibly lower than the taxation in the UK. And there are other products, and this is a huge opportunity that this new tax incentive has, which is there are a lot of other products that people currently invest, which are capital assurance policies. These capital assurance policies, like insurance bonds, what happens is that if you are on the tax incentive, the income that you receive from those bonds will not be taxed neither in the country where they are sourced, neither in Portugal for a period of 10 years.
Okay.
And we could talk about a big tax saving. So basically what they are trying to say here is that if you're planning to move to Portugal and live here, there are several tax opportunities, and you should plan ahead before your move, because we can assist in mitigating your tax exposure.
Okay, just one last question regarding the 20% flat rate. You don't have to work for a company here, right?
No, you will have to work from a company here, but we have clients that set up their own company. So we help them incorporating a Portuguese company, which will then invoice their clients all over the world. And what happens is that we do it under fiscal transparency, which means that there will be no corporation tax. The tax is paid by the individual because he has a professional activity which is linked to this company, and he will receive the profits of the business and he will pay 20% tax. So that means that there's no further tax on dividends, and it's a huge saving compared with normally with the country where they are. The other alternative, which happens a lot, especially with Americans, because the double tax agreement with the US is very different from the others, because as an American citizen, you always pay tax in the US. Unfortunately, there's nothing I can do about that. What happens is that sometimes it's not a good idea for them to open a company here, because there will be some tax liabilities on this company in Portugal that they might have to pay in the US. So in those cases, what we normally do is we have an employer of record. It's a company called Unbound Jump. You can look at unboundjump.com. That company basically exists because it's fully compliant with the TSRI, the tax incentive for scientific research and innovation. And we will bill the services that the client is providing through our company, the employer of records, to their company outside Portugal, in the US, for instance. And by doing this, it means that he will be tax exempt on all his foreign source income. And because we have this issue with the US, where normally the US taxpayer pays some tax in the US and some tax in Portugal, that will mean that the American taxpayer, and in this case is American taxpayer and Portuguese taxpayer, he will pay 20% tax on his salary in Portugal, but no tax on all his American income. So the distributions that he receives from the LLC that he has in the US, all that is going to be reported in Portugal, but there's no tax.
Well, Ricardo, that's great advantage. How IFM can help the
I
clients?
mean, if someone is planning to move to Portugal, they can schedule a meeting with one of our tax advisors. We can explain how the process works from the beginning till the end. In our company, we have a team of 44 people, and all of them speak English. Some of them speak French, and we can help them from A to Z. So basically, we can help individuals. We have a tax relocation department that can help them on the relocation process. We can help them obtaining the tax ID numbers, the NIFs. We can help them during the process of relocation, and then we can either do their tax preparation every year, or if they want to incorporate a company, we can also assist them in incorporating a company and doing the accountancy for that company. We try to offer a full service, and as we say at AFM, you must pay taxes, but there's no law that says you got to leave a tip. Stay in touch.